most of the New Zealand stocks there are trading pretty poorly. So they are on top of inflation there, but it's come at a bit of a cost. They've just had their first rate cut in August, Chris, and could cut again here as well. And I think you're going to see a few rate cuts coming out of New Zealand here sort of shortly. So that could sort of stimulate some of those stocks there.
The market's roaring ahead and commodity companies are driving higher off the back of Chinese stimulus announcements. With a rapid rise of these companies, it's taken many by surprise. Although not Gary Glover. Check back a month ago and he was the one who was saying he was loading up on commodities and it was their time to shine and take the lead. Hats off to you, Gary. That's one way to start the month of October, coming off a very solid end to September. He's going to walk us through his weekly report where he looks at the indices, the trading opportunities, and understands the charts and how it's setting up to be the best opportunities on the market. With that, he's also got a curly one for us where he's proposing a new China. What could that be? Good morning, Gary. How are you?
Yeah, lots going on there. That's it's funny. We didn't we did know that that the banks would eventually sort of come off, and the resources would eventually rally here. So that sort of, we talked about that shift probably the last 3 or 4 weeks there, but I honestly didn't think it was going to be quite as dramatic as it has been in the last week. So so obviously the China stimulus got resources cracking, commodities cracking as well. But to be honest with you, I felt like those banks were really grinding away, sort of, apart from being way overvalued there, just felt like it was going to take them to sort of start turning down here resources to sort of head higher there before, for the sort of both sort of fall in the line there. So did take a little bit longer to occur than I thought actually, but it was pretty breathtaking moves there last week. So some pretty good moves in stocks like Mineral Resources and Fortescue and BHP. So just some of the bigger stocks as well, even some of the lithium names. I mean, some of the uranium energy names just, and I know, look, we saw them light up 3 weeks ago on the launch pad there, but there's been some follow through here. So they've all gone pretty aggressively here. I think you wouldn't be chasing that here. Just, me personally, I've sort of taken some profits there on Friday and a lot of those, and I'll sit back and wait for a pullback consolidation there. Do you remember the property trusts that did something similar, Chris? They come out of the gates pretty hard, went up pretty aggressive for a week, not as aggressive as these resource stocks, but did have an aggressive move. Then they sort of went through like a 1 or 2 week consolidation, and now they continued higher there. So I think these resources are probably due for a 1 or 2 week consolidation of sort, and then we'll move higher there. So, but yeah, interesting markets there. Plenty, definitely lots happening here within the market itself.
Well, that's a solid gain that I'm looking at when you're talking about those commodities, that rotation that we were waiting to happen, just going longer and longer. But it's, as you talk about on Fridays, those trends and movements in markets can go longer than we expect. Just quickly noting on your spreadsheet here and within the report, your mineral resources, that trade. So those who follow Gary, they know the trades that he puts on. But so they can just screenshot that if they want to have a look at that. But we're going to jump into the indices because obviously when you were talking about the rotation happening within the Australian market, the banks to commodities, it was also affecting the overall indices and how that happens. We'll get to the Aussie in a second. We still have the NASDAQ chart as the first one in the report. It is underneath that overhead trend line that we were looking at before. And it seems like there's a bit of a wedge happening here, so it's sort of tightening up. Is this conforming? Any change to what you've been looking for previously? Any warning bells? What's happening?
No, look, obviously you get the rate cut there, 50 points there in the US there. So the Fed's gone pretty aggressive there. So that's obviously good for growth. So got a bit of a boost there the last couple of weeks there, but not really hit it out of the park in terms of, looking at the other indices. I mean, the S&P 500 at a new high, and obviously the Dow's, well above the high there. So, but yeah, I just think you're probably just going to see a grind higher here. Well, I think at some stage you might see some sort of consolidation there, but I noticed that Nvidia and Tesla, so they both sort of had little, sort of pocket pivots and broke a little B waves. So they look pretty firm here. But I just think maybe you'll get some sort of consolidation there. It's funny, I sort of like October 22 and October 23 have been lows in the market there. So I was kind of thinking that would be good timing for the next little swing low. But hasn't shown too much strength there so far. I think this has been one of the best Septembers markets had. So yeah, it's pretty buoyant so far. But yeah, I just think you'll probably see the slow grind here. I don't think we'll see any big correction to the end of the year. The 60-year cycle, which is the one that we have been following the closest to, that did run up into November before it had a bit of a cool off, and then finished the year off pretty well. But the biggest pullback was actually in not October. But we'll see. Yeah, I just felt like the last couple of Octobers have been sort of lows in the markets. I know that sort of 12-month cycle can extend out. So, but I think any pullback's going to be pretty mild, Chris.
Okay, so mild pullback on the NASDAQ, but you did note before that we had the S&P 500 coming up to highs, that important resistance where it did play out before 61.8 on the Fib levels. It has surpassed that convincingly now and closed the second week just higher above that resistance level. Is it that slowing rate? So I'm looking at these last 3 weeks. The candles are getting smaller in range.
Yeah.
Is there any interpretation into that, or it's in too deep?
Yeah, look, the big thing there is breaking that 161.8. It's sort of like the 150 for us. I mean, anyone who's followed the XJ over the years know that we pull back 50%, we expand 50%. It's just a big level for our markets. This is sort of the level that we always hit. Where the S&P 500 is the 161.8 is just a big level historically for that market. It's always been strong resistance or support and coming back at 61.8. So just a big level for this index. Just got some sort of strong history at that point. So the fact that we've gone through that level is pretty positive there. So I know it's up a little bit there, but again, we just might sort of grind higher here, so it's still a positive sort of break there. Nothing too weak here. I think you just might sort of just grind, do that little sideways sort of grind here into the next month or two there, but I just don't think you'll see any sort of major weakness there for this stage. So I think it just sort of keep grinding higher here. Obviously, from here, as I talked about, now going through rate cuts going to be kind of seen as sort of positive in the short term there, just to see whether, I guess the market will be watching the data from now on, Chris, just to make sure that the economy isn't, some of those economies that have had rates higher for longer there, like obviously the US, maybe the UK, Canada, and New Zealand, obviously they've had the really high rates for a while. So that has really put the skids on those economies. Even though it's killed inflation, it has kind of half killed their economies as well. So they're trying to now cut rates to sort of get their economies sort of going here. So just be interesting to see what that. So people will be looking at the data, some of those economies there that had those higher rates.
Okay, so that's a bit of a forecast of what we can look at from Australians' perspectives, what the other countries have been doing in this sort of climate. You mentioned the Aussie. Now, where we are moving here, we are at highs and the mining shares have kicked into gear. The banks still hold a very large proportion of the index, very high index weighting. So obviously, as they rotate down, we do need the likes of what you talked about, mineral resources, Fortescue Metals, Rio, BHP, surging so high to be able to offset the large falls that we're having with banks. But at some point, that can equilibrate. In saying that, they're roaring ahead, but we're above this resistance zone. How do you see that unfolding for the index itself, putting a blanket over all of those top 200 companies and what's happening underneath?
Yeah, I just think you're seeing nice rotation through the market, Chris, as well. So we saw obviously a big move in resources there. The banks have had that, sort of 7 or 8% pullback as well. So much as I still think they're way overpriced. A lot of them, it's not going to sort of come back to a fair price straight away. I think you're probably going to wind back here. So I think the banks have had a pullback here, sort of 6 to 8%. Resources have had a pretty big move, probably larger than that, obviously driving the index there. So I think you might see maybe the banks might have a little bit of a counterbalance there. Maybe resources will cool off after this sort of big move, maybe sort of consolidate for a week or two. But you're just seeing rotation there, seeing different sectors sort of come into the market there. So that's healthy there for the overall market there. So just think we'll probably, we'll go through be a little bit choppy here, but I just think it's just going to keep grinding high here. I think the signs are pretty positive there. We've seen any decent sort of sell-off in the market has been met by some pretty strong buying there. So yeah, I just think it looks still looks pretty positive there. I think we'll just kind of grind higher here. Election years typically don't have large pullbacks in election years normally, so I think we'll sort of grind it out to the end of the year.
And the economy that we've looked at for a few times for its dramatic moves, I don't know what the overlay looks like for the US election. That might be an interesting conversation in itself. But the Shanghai Index has obviously shot the lights out and a massive range just in the last week, obviously off the back of the stimulus. So when you look at this chart, I know you've analysed this a fair few times and going back over decades to really see how much power it can have. What's this chart telling you, the one that's on the screen?
Yeah, it's funny. Michael Burry was buying Chinese equities about 3-4 weeks ago. They probably went a little lower, but he's a value. Obviously, he's seen as a value investor looking for to buy assets, sort of not distressed state, but just vastly undervalued compared to other commodities, other sort of equities there. So I thought that was sort of interesting a few weeks back there. But we're seeing here big, obviously, Shanghai sort of cut rates, a bit of stimulus in there, and obviously everyone getting excited about that. So, a lot of people have been calling for this for a while here. So, it's just interesting. We've had a pretty big jump there. So I think the market got a bit oversold there, got a bit, undervalued there. We've had a big jump here, but I think this is often how these sort of things do start, Chris, as well. So, that these can sort of be the start of big moves. We've sort of seen a few times in the past there, Chinese step in there and stimulate their economy there, and it has sort of resulted in a bigger move. And so I think you'll probably get a bit of a consolidation here. Look, this might be one that maybe it tightens up under that old trend line there, might consolidate there for a couple of weeks. But I still think this is probably pretty positive. You just might get a week or two consolidation before it pushes higher here. So I noticed that sort of VanEck's got a couple of funds here, the CETF, which is the China ETF, and then there's got the CNU, which is sort of like a new technology, which is sort of just Chinese market orientated there. So, there are probably a couple that I might look at there in the coming weeks. Yeah. But the CNU that's really popped pretty hard. So, I'd be probably waiting for it to sort of pull back, consolidate here. But I sort of feeling like it probably won't come back that far, actually. I think it'll probably just, maybe consolidate for a few weeks there. Might do sort of something like that. So see that sort of July of 2020 there, how it sort of broke up and pierced through. Then I had maybe 1 or 2, 3 weeks consolidating that move, and then it climbed higher. Then it sort of went a bit sideways for a bit, but then it continued high later on. So don't be surprised to sort of see something like that. But I think it does look sort of positive for that market there.
And that does fit in with the narrative that you've been talking about with the commodity companies in Australia being able to about face and actually drive up, which they have done, and that's obviously a good call. We'll put a link in the notes below to those previous weeks where you talked about commodities having their day into the rotation. Now, the biggest one on the ASX, BHP, biggest mining company there. This is the weekly chart, and we can see that massive movement that's just happened. So how does that look in comparison to, the rest of the chart? That's quite a dramatic move. Is that sort of positive, negative? Can this be the start of that rotation, or is it such a rapid move? That's
a big question. Is this just going to keep follow through and keep going here? So we have seen a few things in this market. There have been a lot of V-shaped lows, probably a lot more than normal, where the market's really sold off pretty aggressively and then come out of it, pretty hard as well. But I think normally with sort of commodities there, they do. I know sort of, having sort of traded BHP and Rio commodities over the years there, I've sort of noticed that like a lot of industrials might, if they rally up quite a bit, they might come back until half the range. Whereas I've noticed that commodity stocks, resources, they'll come back, say 3/4 of the range a lot of the time. So oftentimes they can come back a bit deeper into the range there. So when I look sort of through a lot of the sort of historical lows for like a lot of the big cap miners there, it's probably 50-50 there, Chris, in terms of whether you come out here and keep going or whether you come out and come back here. So I think, there's probably a good chance that we'll get either, at least a couple of weeks of consolidation, or if not, we could see a deep retrace. Just got to remember here that the market's swinging from one metric to another at the moment pretty wildly. It's sort of was soft landing camp for a long time. Then we're in the hard landing. Then we're back to sort of soft landing. It could switch in 2 weeks there. Obviously, I'll be like, oh, why are all these central banks cutting so aggressively, and why are they throwing everything at their economies there? Then there'll be some concerns or question marks around that. So I just see the rhetoric changing. Markets really, dynamics are changing. The sentiment changes really fast here. So you're just going to be careful chasing those things that have already rallied, 10, 15, 20%. I think you've a good chance of actually, Oregon, there's probably a 50% chance they'll snap back here, come back, maybe 50% to 2/3 of the range here. So I think there's a high probability, really. So I'd just be a bit cautious there chasing these personally.
All right. And then you have traded them, possibly sold out into heat and taken profit, which we saw just earlier on the table, how you run that portfolio. Another one in the same space, IGO, not as big as BHP, but a very big fall. Looking at the percentage moves that have had, from where it is, that is a large percentage gain, but in contrast to where it was, 18 months ago, it's less than about a third. So this big chart, these boxes, what are they telling you about IGO?
Yeah, I think it's important. We sort of know how these, sort of cycles go, Chris, as well. So once, typically when you come out of a market low, the money goes to the big caps first, and then it rotates through the mid caps. And then as you're sort of getting late in the move, money goes to the smalls. So the smalls is usually the last, part. And then once the smalls have had a bit of a pop there, that's normally sort of your end of your move, and then you can go through a corrective process. So although this is a sector-orientated market there, you've got some sectors that are flying, other sectors are getting crucified there. You've got to sort of take the same approach with the sectors as well. So we're seeing, like last week there, we saw just big moves in the heavyweights and the big caps, which we sort of saw the last 2 or 3 weeks, to be honest with you. I think in your Friday report there, we saw that the big cap miners were up in one of the top sort of sector moves there off that move 3 weeks ago. So with uranium and lithium and I think iron ore at the time there, we had the big cap miners were all moving pretty fast as well. So you do get that big cap move initially. So I think you got to probably start looking at maybe even though it's been a pretty short, only few weeks, it's been a big move so it's big cap. So kind of got to start looking down the line a little bit. So I think some of those sort of mid cap names might be worth a look here. So I think IGO is sort of contender. Just because it's had a pretty large pullback here, has been sort of shown to be one of the lowest cost producers in that lithium area, and just technically it's sort of coming off a really long term support line in the month. We've had a few monthly charts out there previously, just a big level there. So a big expansion there on that C leg down here. So I think this is one to sort of watch here. I think it'll probably do it, just because it's come back so deep. I'd expect this to sort of to build a bit for us as well. Because sometimes those sort of deeper lows, particularly there, this has been going for quite a while. It might need a little while to build. So I'm hoping this might, do it something like a 0, 1, 2, 3 pattern there, where you build a bit of a base. These few high lows there. This could be one that could set up there and give you a bigger move here on the turn. So, I think this one's pretty encouraging there. Just want to see some more signs of positivity there. But if we get a bit of a basing character there, it's going to be one to actually look at.
Yeah, just to clarify, because we do end up getting questions from viewers, and happy and welcome them, put them in the comments below. And a lot of members ask as well, hang on a second. Friday, Gary's talking about trading in the top half of the chart, chasing momentum. But in your weekly report here, you're looking at the blue chip investor report. You're looking at those that are in the bottom half. So can you just quickly tell us why it is you're looking at these bottom half for opportunities? Numbers show with BHP that works out quite well. But when you're looking at charts like IGO on Tuesdays, but on Fridays, you're looking at those in the top half. Is it the history, and you've studied this part of the market for a long time, so you know that lower can go lower, but you're looking for that opportunity, and then when it gives you the right signals, a B wave, 0, 1, 2, 3 bottom or something like that, you know what that looks like when it becomes a good run and how to identify them or leading.
Yeah, also a risk point of view as well. People sort of know that, sometimes you come out those deep lows there, they can take a while to build. And And, if you sort of wait patiently for, a series of sort of few high lows there, like, let's say, the longer the base, the, bigger the move. So, you kind of want it to, build something there, if you build something solid there over a long period of time, then you can have a decent move there. And then oftentimes we all go rushing in to try and buy these lows, but the reality is it might take a few months to sort of build something. So we might be sort of sitting through that base there for a while. So that's why it's important to me. If you think it might be a low in there, that's all great, but you kind of want to see something sort of built first here, I think. So, yeah.
I'll just looking at the chart and being a retail broker many moons. When you get a sell-off like this, or this one, or this one, this one, and this one, and this one, and probably this one too, you're getting phone calls from clients saying, is now a good time to buy? So it's also you analysing this whole movement here and understanding what's required to happen before it starts rallying again. But we're digressing. We'll get on to some more charts.
I have been caught buying that. I thought there was a little bit of a base in the early 24 there, started to sort of build a few high lows in there, but that looked like it was going to get going there and sort of failed there. Obviously the lithium prices, been deteriorating for the last probably, couple of months there as well. So that obviously doesn't help IGO there, but yeah, you've seen a bit of a move in some of those bloody prices. Some of the other lithium names have bounced there as well. So that's a good lead there. So big technicals there as well. So yeah, we just want to see more signs of positivity here. But it's sort of like that took a few months to build that last base, and it obviously looked like a good base, but it just didn't work out. But not to say the next one can't work out. So but you just want to sort of see that sort of set up there.
Keep analysing them, and Patt is another one that you've analysed, which has formed more of a wider base back here in the day, bought a cup and handle, broke out, rallied. And they got into this consolidation area here, which has sort of touched the highs 3 times, touched the lows twice or 3 times here, maybe 4. So where is it now, and why is it in your report?
Yeah, I think it's a really interesting technical pattern, Chris, because we've had sort of 3 or 4 touches along the bottom, now 3 touches across the top there. So we've got a really solid rectangle, Darbs box, however you want to refer to it. So once we break out of this pattern, we're looking at a move the size of that rectangle there, which is about a $5 move. And so this is sort of, the last sort of move here is sort of tightened up under the high here, and we've just had a bit of a pop there last week out of that little, I guess a little flag there. And so we've already had 1, 2, 3 attempts at the high here. So that little break there last week indicates we're going back for a 4th attempt of the high. Now, the one thing anyone who's ever read anything about Gann is, Gann always said it, you have 3 touches at any other, of a level. So whether it's three goes at support or resistance, don't wait for the 4th or the break. Just go with the 4th move, basically. So the probabilities was very high for actually cracking through on the 4th attempt. So this is sort of something I've learnt over the years, and I haven't seen too many 4th attempts fail, I guess, is sort of so this looks pretty ominous there. The other thing too is obviously Patt has got a lot of some coal assets in its mixture there, apart from being pretty diverse business and with other interests. But yeah, this looks pretty ominous there. I think it looks pretty solid. So I think this potentially, that's pretty tight. That's, if you look at the what are we 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks up, and we've sort of pulled back 3, 4, 5, 6, 6 or 7 weeks there. We've sort of held up probably half of that range there. So we're sort of holding pretty tight there. Volume's picked up the last week or 2 off that low. So I just think this, it's, you're hovering, you're staying pretty tight on the high end here. So I think this looks pretty positive to me. So I can see a catalyst as to why we could, follow through as well. So I think it looks pretty good.
Nice. Well, that's one to look at with Patt. And we did talk about just before our movement of those coal and met coal companies performing well on the launchpad. But Nick Scali, NCK, this is one that we've loved to hate in the sense that it rallied so hard, had great momentum, and then it had that tremendous fall at the end of 2021, most of 2022, and then bang, back up again. So we're coming back up towards those highs that we had in 2021. We have managed to get through them and close higher just in the last couple of weeks. Is that an opportunity to buy? Is that an indicator that, hey, we could actually keep going?
Yeah, like look, it's a large sort of cup and handle, which is sort of what you see in some of those sort of stronger momentum names. And yeah, the sort of handle's been pretty tight there, not too much volume in there as well. And now we're sort of broken to the near high, Chris. There's been some pretty reasonable volume on this last leg up, and some pretty decent volume on the break as well. So yeah, no, look, any technical pattern can fail here, but this is sort of one of the ones that you know, for the sort of strongest names there. So look, interesting. Nick Scali sort of obviously been a great business here, but it has sort of you know, starting to make some inroads into the UK, but hasn't quite gone as smooth as they hoped so far. But yeah, maybe with interest rate cuts there, might be sort of seen as sort of, you know, could benefit those other markets. So yeah, look, at the end of the day, technically it's broken out here. So most people are afraid to generally buy these type of breakout spreads because they're sort of buying 52-week highs here. But when we have that sort of cup and handle set up, it's just a very it's a very strong pattern that we see in the strongest names and often lead to sort of bigger gains here. So just interesting here that this one's broken out there. So technically it looks quite good.
Nice. Well, that's what we like to hear, especially the cup and handle and all the studies that you've had of the market leaders and seeing how many times the cup and handles show up, just like William O'Neill did for the last 80 years of his assessments. So great to see cup and handle in your report this week. Spark New Zealand, SPK going over the ditch. You did mention that there could be a possible movement with the rates and how the rest of the world, developed economies, are working with it. Australia's a little bit behind. This has been absolutely torched. $5, almost cut in half. That's huge for a utility type company. So how does it get itself into your report this week? What's happening?
Yeah, so if you look through most of the Kiwi stocks, most of the New Zealand stocks there are trading pretty poorly. And like one of the reasons there is that New Zealand has sort of has gone into a technical recession for like the second time in about 18 months there. So they've had 2 quarters of negative growth. But you remember that that's on the back of them having rates here around 5.5%. So they've gone really aggressively. I mean, everyone's complaining here in Australia about 4.35. I mean, New Zealand's had 5.5 for quite a long period of time here now. So they are on top of inflation there, but it's come at a bit of a cost. It's meant, you know, a bit soft and damp economy there. So, I mean, if you look at, you know, Spark, Fletcher Building, Auckland Airports, I mean, AIZ, New Zealand, all those stocks are really in the doldrums there because the economy is pretty soft. So the earnings have been a little bit soft there. So I noticed Spark there that the revenue line was pretty flat, but profit was down there just because, you know, the economy is pretty soft in general here. So they've just had their first rate cut in August, Chris, and could cut again here as well. And look, coming out of these sort of soft, you know, we're just seeing the Chinese start to get a little bit aggressive with another rate cut and some stimulus there, and that's got the Chinese stocks, sort of the Chinese market sort of humming there. So, you know, it wouldn't surprise me to see New Zealand follow suit there. Obviously, we're seeing Canada make a cut, you know, have a rate cut there, only 25, but the US has done 50 basis points. So, you know, I think New Zealand, you know, with economy sort of stuttering here, there's more likely to be some, you know, I think you're going to see a few rate cuts coming out of New Zealand here sort of shortly. So that could sort of stimulate some of those stocks there. So I just think, you know, it's a good chance. You know, it's a chance here that we could see some more further stimulus coming out of New Zealand there, trying to sort of get their economy back because it has been sort of tough there. So I just noticed that Spark and Fletcher are probably the two that look the most beaten up to me. So I mean, Spark's on, I think, well, yield might be, well, it says about 8.9 on my iris there, but I think with that earnings haircut, it would probably be maybe 7 to 7.5% the yield there. But yeah, that's the revenue's flat there, just the, you know, profit sort of down here. So, you know, it's, I mean, if you know Spark is, Spark's basically the Telstra of New Zealand, so the biggest telco there. But yeah, so it's had a massive decline here. So I think it's just one to watch pretty closely here. I've sort of tinkered in with a small sort of starting position there. Shouldn't really be, buying sort of V-shaped bottoms here, but we've just seen here recently that like a lot of these V-shaped lows are just coming out so hard. So, I'm sort of there. I just sort of start slowly here and build a small posse. But I think, we see any sort of activity at a New Zealand central bank or and politicians there with regard to sort of more stimulus there. I think it's you could see some bounces out of some of these Kiwi stocks, which I think really look really, really oversold there.
Nice. Well, oversold Kiwi stocks, if that's anything like a month ago where you were talking about oversold and accumulation happening in the commodity companies, well, we'll be set for another ride. Now, another one that's in there, AIA, so similar sort of theory thesis running along here. Chart's a little bit different. So what is it that you look for this chart? Do you take comfort in sort of the false break, or is it not sort of too close to the previous October lows in 2022 that it might come down lower? How do you interpret these triple lows echoing before?
Yeah, another Kiwi stock here. Yeah, obviously infrastructure sort of stock as well. So not too many of those infrastructure assets around this as well. So, but a large ABC on the weekly to come back to retest the low as well here. And then just the last thing on the chart there is we have gone to a new low, but then reversed last week on some pretty good volume as well. So a bit of a false break of that low as well. So, if we can sort of hold that low here, I think it's probably good level there. We're just seeing quite a lot of these bigger corrections, and we've seen a lot of these false breaks here in the last few years as well, come back and retest some old levels there. So just think this looks pretty interesting here. Just seeing another contender here. I think we see a few more rate cuts in New Zealand there. I think that'll be pretty positive for those sort of airline stocks as well, which we're just basically sort of spending's been pretty tough in New Zealand there. So any relief there, the market might get a little excited there.
Nice. Well, that's fun to watch. But another one in a different space. So we're still talking about healthcare, which is something we've talked about for some time. But this chart, well, Sonic's just puzzled a fair few investors. Haven't quite been able to get the legs behind it to get going. So a few marks on the chart and some shoot levels by the looks of it. What is it that's going on in this chart?
Yeah, it's interesting. It's a nice had a fair pullback here, but it's actually been respecting the technical levels really nice, the fib levels. So on the way down, it bounced a couple of times off the 50% level, rallied back up to the 61.8, and then once it cracked the 50, it went down to the 61.8. Now we've bounced back to the 50. So I think this is a good lower place here for a lot of these healthcare names. So I think we're sort of building here. So no surprise to see some resistance at that old 50, but I think we've held here sort of tight here. So I think I think there's a good chance we'll hold here and then push up here. I think we push up through 28.15. I think it can go all the way through to 32.50. It's been a little slow so far. But again, sometimes, we've sort of got the first high low, second high low here now. So you get a little bit of a base sometimes before you get the bigger move here. But I think this is still pretty constructive.
All right, so we've got some constructive charts here. We've got some that are really down on the knees, but the opportunity is they can possibly turn the corner like the commodity companies did over in the last couple of weeks. And definitely do go back and watch those videos because Gary really did talk about that accumulation happening in resource companies. So looking at these reports, seeing how they have moved and how the opportunities are there, they are definitely in the lower half, but as Gary's noted, that's what happened with property trusts earlier in the year before. So we use really surfacing these blue chip companies, the larger caps, for us to have an opportunity to look at. So with that insight on this week's report, Gary, we say thank you very much for sharing it with us. It's worked out very, very well in the past, and we'll see you again later in the week. Thank you, Gary Glover.
Thanks, Chris.